Scott here, your loan man. It's great to be with you. I want to take a moment and tell you a story. A client came to me recently and told me a pretty sad tale, and hopefully, you'll understand why I was inspired to make this video. He's a first time home buyer, and he got pre approved. He went shopping. Took him a while. He was making some offers. They weren't getting accepted. Finally, he got his offer accepted. He was, of course, you can imagine, really excited. He'd never been through this before. Finally, found a home that was a good fit for his family. And it was a 30-day contract, which is pretty common. And about 3 weeks in, it just blew up. He didn't get the house. Obviously, he was really frustrated. He was embarrassed. He told me that he bitter was actually the word that he used. He felt like the loan guy that he was working with hadn't given him the proper coaching that he needed to set him up for success. And he was so frustrated that he really didn't try again for over a year, which is how he got referred to me. And it made me feel like I want to make sure that I'm empowering people and giving them information. I've been doing this now for 19 years, and you certainly see patterns. So, this is 5 things that you should never do when you're buying a home. The first thing I want you to do should be pretty easy. Make sure you know where your important documents are and they don't get packed away. Okay. It is pretty normal that people are moving and their boxes can end up in storage. They might be going from one side of the country to another. And it's not just your loan guy that's going to need your documents. And I'm talking about your bank records, your tax returns, your IDs, your social security cards, things like that. There's title and escrow companies. There might be attorneys involved. Know where your documents are and have them handy and be ready. Also, I want you to be careful with your credit, especially once you're under contract. Don't open any new accounts. Don't close any new accounts. Um, what I'll see is that people are getting ready. They're buying a home that maybe needs some work. And as a result, they might decide to start buying furniture or open up a new account with like a Lowe's or a Home Depot. And you don't want to do that. Wait until you close on your home and you have your keys and then move forward from there. Another thing you should do is, well, don't get fired. Okay. And I know you're probably all rolling your eyes at me and Scott, come on, if I don't have a job, I'm not going to buy a house. But I've seen it happen. I've seen a very nice lady who she got in a fight with her boss, and she was actually in my office. She was closing. She was signing her documents, and he called us and he let us know that he had fired her that morning. And of course, her loan didn't close, and she cried, and it was a sad situation. But what I will see more commonly is when people's the manner in which they're being compensated, we'll say, changes. So if you go from salary to commission or from W 2 to 1099, for example, it might become impossible for us to verify your income in the way that it would need to be verified in order for you to qualify for the loan. So if there's something like that going on, you should either wait until you've closed and you've got your keys, or make sure you discuss it openly with your loan officer and have a plan in place so that you don't lose out on the opportunity. Another thing that I want you to be careful with is your assets. Try not to move your assets around any more than absolutely necessary. It's pretty common that when people are buying homes, they're pulling money in from everywhere they can. Maybe their neighbor owes them money from years ago. They're having a garage sale. They've got some mattress money. And well, the reality is that we are strictly regulated. There's quite a bit of anti money laundering regulations, which you could imagine are there to fight mostly drug dealing. And we have to verify the source of all of the funds that are being used to help you buy the home. And we have to look back at least a couple of months in order to do that. So be careful and try not to shift money around any more than necessary. The other thing I want you to do is do your due diligence on who your loan officer is going to be before you're under contract. The reality is that once you're buying a home, you'll be surprised. People will come out of the woodwork, and your phone will probably blow up. You're going to get a lot of unsolicited phone calls. There are call centers out there that you see spring up, especially when rates are low. These are boiler rooms or whatever you want to call them. And frankly, most of these places, they're they're good on the phone, but they don't have a lot of experience. Buying a property is a unique skill set. Those types of loans are more complicated than, let's say, a refinance. So make sure that you have confidence in the person that you're working with and the team. And this is one of those situations where going with the cheapest option isn't necessarily the right way to go. So be careful, do your due diligence, find someone you trust, and if you like them, stick with them. Okay. And obviously, we do loans here. So if you're looking for somebody to work with, of course, I'd be happy to help you. We have a great team. But if you don't know who to talk to, if you don't know who to trust, I would recommend that you lean on a real estate professional, talk to your real estate agent, and do your homework, and then move forward with confidence. And thank you so much. And I hope this was helpful to you. Have a great day.